been a little slow the past couple weeks. As you will definitely see by our charts, it's not easy when you're trying to swing trade, trying to trade momentum-based movements when there's no momentum. And this is where patience comes in and discretion becomes the better part of valor. Okay, little bonus pick here. You guys ready? Watch Goldman. Goldman Sachs, look at it. Breaks its 50-day moving average. Definite break yesterday. It's struggling in an up market to try to get back up and over. Keep an eye on Goldman. If it can get back over and get above this flat line here at 240, call it 246, we got a shot for it to run back. If it can't, it's probably going to continue this breakdown. And it's got some room. Fundamentally, the news from the Fed was not good for the banks. Remember, the banks make money when the yield curve is steep. The steeper the yield curve, the more money the banks make. But if the Fed raises rates slowly, then the yield curve is going to stay flatter longer. And that, of course, is not going to be good for the banks. And that's important because look at the run the banks have had due to two things. Deregulation, or at least some deregulation, and rates going up. Well, guess what? Anything else now is going to be bad news. Because look at this run in Goldman. Goldman was drifting around 170, 160, 170 until the election. As soon as Trump got in, they're screaming deregulation. Rates are going to be going up. The stock takes off. Now the stock's earnings are going to have to justify this movement. Well, guess what? If rates are going to go up slowly instead of a little more quickly, well, that's going to make it harder for the banks and Goldman to justify this level. If the market starts to actually trade off a little bit, Goldman's going to be one of the first ones to break and go down. If you take a look, it hasn't been that strong recently. Now, the market hasn't moved, but neither is Goldman. Actually, Goldman has kind of started decaying away a little bit here. Just keep an eye on it. Broke the flat line, and it's sitting right on the 50. And right now, the market is saving its rear end. But if this market isn't up, Goldman gets hit. So keep an eye on that. The other banks also look the same. Goldman and these banks, they've got decent tight markets, so we don't have to worry too much about giving up too much of our profits in some crazy bid-ask spread. These are reasonable markets. In any month you look at, they're very reasonable markets. But the only thing saving it right now is the overall market being up a little bit. We go back to unchanged, Watch this thing go to the downside. And don't forget, Morgan Stanley, JP Morgan, Citigroup, Wells Fargo, they all look the same. These stocks ran up on optimism and the expectation of the best possible news. They got sidetracked a little bit here, blindsided by the Fed talking about slower interest rate movements. So tomorrow and Thursday, you've got a bunch of Fed governors speaking. If they start talking about slower rate increases, that's not real good for the banks. Everybody with me? I have a flat line going back a ways right here at around 235, 236. And we've broken below it a couple times, but we got saved by the 50 here. And here at the beginning of February, we got saved by the market bouncing up a bit. But we're just sitting right here on the 50. We're not going to stay here for long. We either got to get back up into the game to the upside, or we're going to fail and carry through this breakdown. And 236 would be the first stop. And it doesn't look far, but that's a reasonable amount down. It's down $7. Okay, everybody? Any questions? Again, don't force anything. Right now, we wouldn't trade Goldman because we don't like trading breakdowns in what's kind of a little bit of an up market. Unchanged market, fine. But right now, the market is kind of a little up.